Welcome, and thank you for checking out our How to Invest in Hamilton video. This resource is dedicated to providing you with additional information about Hamilton, along with some effective strategies around investing in our city. As you may already know, Hamilton has been forecasted to be one of the best cities in Canada to invest in for well over a decade. Primarily based on underlying economic factors such as increasing average income, decreasing employment, positive net migration, declining lending rates, the effects of transportation, and most recently, what we call the ripple effect. When it comes to employment, the largest employers in Hamilton are the Hamilton Health Sciences, McMaster University, the City of Hamilton, and the Hamilton Wentworth District School Board. These are all government-backed, well-paying, secure jobs. Located in the most densely populated corridor for economic activity in the country, Hamilton is right in the heart of the Golden Horseshoe. The Golden Horseshoe is home to roughly 9 million Canadians today, and it's forecasted to grow to almost 14 million by the year 2041. This region is experiencing what's known as the Manhattan effect. With Lake Ontario to the east and the world's largest green belt to the north and west, and development is furthermore restricted by the Niagara Escarpment, a global biosphere. Essentially, we are running out of land to build on in this region. As a result, Hamilton is gearing up for at least a 50% intensification starting back in 2021 all the way through to 2051. This requires over 110,000 new housing units required to meet this goal. Of these 110,000 new units, over 3,000 of them are forecasted to be accessory dwelling units. Hamilton has also recently experienced a shift in population growth, whereby the largest demographic segment is millennials. This cohort of individuals are looking to purchase and rent homes. This is a great opportunity as landlords. The City of Hamilton is currently home to approximately 600,000 people and is expected to grow by an additional 236,000 by the year 2051. That's an increase of almost 50%. Under the GO Strategic 2020 plan, the GO by Metrolinx, amongst a number of other initiatives, is planning on converting trains from diesel to electric, which will have a significant decreased commute time along with increasing frequency of traffic and additional stops through Hamilton into the Niagara corridor. Most recently, the effect of COVID on housing has really fueled what is referred to as the ripple effect. Hamilton has for a long time been known as a bedroom community for commuters into Toronto, but as a result of more virtual workspaces, many homeowners and tenants are leaving the city and residing in larger rental properties and homes. As a result of these moving economic forces, we are forecasting the addition of 122,000 jobs in Hamilton over this time frame. For those of you savvy investors that are looking for some of the fundamental stats and metrics, get your pens ready.
The current average home price in Hamilton is $760,492, which is down approximately 2.75% from the same time last year. When it comes to historical appreciation, if you were to take a look at a 60-year average, Hamilton has seen price appreciation around the 11% mark per year. When it comes to vacancy rates and average rental rates, a one-bedroom's vacancy rate is 4.5% and rents for about $22.13 per month. A two-bedroom vacancy rate is hovering around 2.8% and rents for $23.49 per month. And lastly, a three-bedroom vacancy rate is about 1.9% and rents for $2,776 per month.
One of the most common questions I get almost daily is how's the market? And whether you realize it or not, when you're asking this question to a realtor, what you're essentially asking is, are we in a buyer's market, a seller's market, or are we in a balanced market? The market intelligence tool to determine the strength of the market, or what is also referred to as the absorption rate, is what is referred to as months of inventory. A seller's market is defined as 0 to 4 months of inventory. A balanced market is defined as 4 to 6 months of inventory. And then a buyer's market is anything greater than 6 months of inventory.
In Hamilton, we are currently sitting at 4.5 months of inventory, which is defined as a balanced market. This means it would take about 4.5 months for every house currently on the market to sell based on current buyer activity.
As an investor, all these metrics are really important to help identify effective short-term or long-term, as well as negotiation strategies and tactics. Some of the most effective investment strategies that we see in Hamilton include a long-term buy and hold, a flip to yourself, because of this realized and ongoing forecasted price appreciation, and we do also have a small portion of the market dedicated to student rentals. If you want to learn more about what Hamilton has to offer, please don't forget to register for our Deal of the Week and our free investors reports using the links here in our virtual booth. We hope you found this insightful and look forward to helping you achieve your real estate goals in the future.